So today, after the Powell testimony, everything sold off. Dollar rallied as on the back of the statements that he made regarding the interest rates that they will have to be being raised for longer and higher. The terminal rate will be higher due to the tick up in inflation. So I'm looking at the euro right now and what to do with it and how to short it. So, first of all, I want to point out to Exhibit A where we stopped this current rally um, in February. In the beginning of February, we tapped out at this order block on the weekly order block here. As you can see, this was the order block. We tapped into it and reversed. And on a daily, there was also this to there was this fair value gap that we basically hit. So we had a double whammy reversal right here. And right now, after momentum switch into the negative, we also now have a confirmed daily head and shoulders with the neckline being broken right now. So I want to make I'm personally targeting around this 618 101 area for this sell off to as a target. Why? Well, first of all, so if you draw fibs from top to bottom, this latest leg up after this massive downtrend in 2022, we had the rally on the back of the news that the inflation has been conquered, and we are seeing Fed pivoting and stopping the rate hikes around 5%, blah, blah, blah. None of it came to fruition, and that's why now markets are pricing in new reality. With the new reality being that inflation is not as easily tameable as everybody expected it to be, and thus, as per Powell's testimony today, they will be raising rates for longer as previously anticipated. So markets will have to price that new information in, and that is what's happening. So let's start with the daily chart. So first of all, I like to trade confluences. What do we have here? So we have this fair value gap here on the daily chart between this and this candle right here. It's also coincides with previous resistance. Now will be a breakout point after the bottom here. Now we're gonna have this as a retest coming in here, and again as a confluence. So we have a support. Our previous resistance will serve as a support, and then we have the fair value gap fill, and we have this 618. So 618 comes in around um, 101.07. So let's say 101.10 ish is we are currently trading on 105 and change. So that's a 400 pip drop right here in the coming month, maybe a couple of weeks. We'll see. But that's what I'm looking at. Obviously, it's not going to be just a straight shoot here. It might take a month, and it's going to be choppy. But a lot of things are pointing here. Obviously, we still have to tap the 38.2, which I expect probably to be tapped during NFPs. If not tomorrow, meaning by the end of the week, definitely we're going to tap this because this is not a whole lot of range. We essentially what's happening now. We're taking out liquidity below this point here. We already did, and as you can see, this was one swift go, no pullbacks, no nothing. So this is indicative of a major repositioning of big institutional players into repricing their holdings in euro. So with his head and shoulders, I'm not a fan of head and shoulder pattern, but uh, I measure it regardless. So this is the breakdown point. Uh, as you can see, it also usually they never complete fully, and as you can see, well, sometimes not usually, but sometimes they do. Obviously, otherwise people wouldn't consider them as tradable at all. But majority of it completes around this area as well. So um, with the head and shoulders, with the fair value gap, with the 618, which is a nice deep pullback. Everything points to the fact that within the next month or so, we can drift lower into this area as Fed will be raising interest rates. And God forbid we have another tick up in CPI um, next month, then it's gonna get really really ugly. Not next month. I think the next CPI reading is in a week or two, so it's gonna get quite interesting. So what are we doing now? Because if you're not in the short now, well, first of all, we can get a scenario like this. We're not gonna get any deep pullback, so you have to basically we're gonna go on a short time frame and look for a deep pullback. But when repricing happens and you get a trending move, kind of like this, when we did right here to the top side, you can see that we get a big move, a little bit of retracements, maybe like 20-30%, and then another candle and another candle to follow through. So basically, this is how I expect this thing to look, but in reverse, obviously. So we got a big sell-off candle. This candle from yesterday, right? And after a consolidation, tiny pullback. So essentially, we have enough energy for this to look starting to look like this, basically. So currently taking out support. Some bottom pickers from yesterday will come in. There is this order block body right here. Uh, let's that we can sell into. So maybe we do a low, we retest, and that should be your sells right here to target this trend line as an initial target. Then after we take out the trend line, obviously the 200, 50% retracement, and then our target here. So let's drop on a shorter time frame, and we'll take a look what's happening here. I'm gonna just mark this daily order block body. Um, so I see it on the shorter time frame. So let's see on a 4 hour. On a 4 hour, I would probably just put my sell orders somewhere here. So we're taking out, like I said, we're just working at the support. Um, any pullback in prior to London session, maybe in a couple hours. Asian session is not doing much because there's very hard after the massive sell-off. They're a little dumbfounded, shell shocked as to what the hell to do with all this. So they're not doing a whole lot, but they did manage to push through these lows here, almost right. So they're chewing through it. Um, After we start seeing some semblance of a pullback, I think that we should maximum that we'll see is 50% retracement of this candle, which is here. So I'm gonna start what my plan is. I'm gonna leave one order if once we bounce at this low here, and if it and then sell off. If it does this, I'll add another position at the 50% retracement, or maybe even somewhere here if it gets to this level. But we should not see these highs taken out anymore. So my stop loss obviously will have to be here. It's not super tight, but this is a swing trade, so this will take quite a while to play out. Even with all said and done, it's only 80, 85-ish, let's say 100 pips. It's not a big deal at all. Compare that you're going to be making 400 pips in profit. So what is our profit? I mean, the profit is going to be this target here. So almost 6 to 1. Let's not get greedy. I'm going to leave it at the top of this fair value gap. 5.3 to 1. That's an incredible trade right here. Obviously, like I said, it's going to take a while and other factors might change. So if you get to 1 to 1, you put it at break even. At 2 to 1, you take a little off if you want. And just this is a long term target. You can actually day trade it in and out, in and out, in and out as well if you want to. But this is how I'm gonna play this scenario out. So if you look at the hourly chart, obviously this is a massive, massive drop. 1.5% essentially uh, in one day, in less than 24 hours, is quite a powerful move, and it will be silly not to expect some kind of pullback. So after moves like this is let's measure this, for example. This is a 1.3%, 1.2, whatever, 1.3. So I expect something like this. Then we're gonna have a 30% retracement. So there we go. As you can see, 38.2 on a dot, on the money, boom, and off we go. That is a very indicative of a powerful trend. When you get a trending move, a start of the trending move, you get the max you get is 38.2, and then a rejection. That's how you know this thing is gonna go much, much lower. When this happens, the first step is 27.272 fib. As you can see, they knew exactly where it was by the closing of these candles. Next stop is 618, and then 1 to 1 here. And but that's so essentially I will be looking for something like this. So let's put on the fibs. Let's say it ends here. So this is a 50% retracement, and like I said, so highly likely here. 38.2. Whenever this thing finishes, this starts retracing, 38.2 is a sell. So you can sell 2/3 at 38.2, and then 1/3 here, or half and half, and or you can sell the whole thing here. It's still 100 pips stops to make 400 pips. So again, this is a swing trade. This is not a one day type of ordeal. But if you want to break it down into multiple day trades, like I said, you can do it. And you just honestly, we don't even need to put a stop loss there. We can just put stop loss somewhere here to shorten it a little bit. Here's something like this. So 85 pips to make 400 in return. 1 to 5, perfect. And so that's the plan for euro. And if you don't want to trade euro, you can probably find similar setups for Aussie, pound. Probably pound is actually even better because it's with the ECB kind of being aggressive. The Aussie and BOE and RBA yesterday also said that they're being a little bit of a dovish instead of hawkish. So the RBA only raised a 0.25% yesterday, and that's why the Australian dollar tanked to begin with. So it's actually going down harder. But as you can see, all these setups are very similar. So wait for pullback and I'll look for sells. All right. So I've outlined my play for the euro. Hope it helps. As always, you're more than welcome to stop by our Telegram or Discord and discuss this live. We also trade live daily, yeah, for free. More than welcome to stop by and check out professional traders sharing their screens as they're taking all these trades live. All right. Hope it helps. As always, enjoy.